Hi, everyone. Thanks for being with us today. It is a historical day, at least since the 70s and 80s, in terms of a bit of a reversal between Canada and the US in terms of free trades. I remember as a teenager being a witness of the first NAFTA agreement between Reagan and Mulroney. But I think the purpose of this video today is really to make you aware that we've been prepared for this. And back in the last summer, every analyst on the Canadian team has been doing their homeworks on their sectors, their respective sectors, but as well all the companies. So it's very much of a bottom-up approach and looking at what would happen if our Canadian companies would be hit by a 10% or 25% tariff. And therefore run this through the income statements, impact on sales, but also on margins and taxes. And, we can look at other scenarios with companies that also have significant presence in the U.S. where these divisions might get a relief on the tax line from lower taxes enacted by the U.S. government. So we'll see how that's going to pan out. As we speak, we know that Mr. Trudeau is supposed to have another conversation with Mr. Trump. So rest assured that we've been doing our homeworks. This is a very fluid situation. Yesterday, most of us were working a full day, if it's not full evening. And I think that as a Canadian fund manager, what's really important here, at first when we face such a crisis, I would say that you have to look at the sectors that are mostly concerned or impacted by the situation. And here in this case, we're really talking about industrial companies because those are tariffs on goods, not on services, as well as energy. As you know, Canadian oil and gas is the largest Canadian exports in U.S. territory. And, there are other sectors, other companies that are impacted, but I would say these two major sectors are the ones that are hit the hardest at first. We were ready, and I have to admit that I think most of us were positioned in a way where I think a day such as today is not a complete surprise and is not too painful in terms of relative performance, and hopefully we can limit the damages in absolute terms. Again, this is very fluid. We'll see how that's going to evolve. I think based on my readings and observations, sometimes it feels a little bit hard to understand exactly what Mr. Trump expects from Canada and or Mexico. Why are we in the same pool of tariffs? So it's a little bit strange to me in the sense also that they had 2 weeks in order to talk and it did not really pan out. So it's almost like it's a first salvo from them, and I think they want to see maybe our reaction. Again, I'm not an expert on this, but let's see what it's going to lead us to over the next few weeks. We have to be also quite careful about what is the response from the Canadian government. And on that front, most of us know that there will be Canadian elections in a not too distant future, and therefore that might change also the playing field in terms of potential negotiations with Mr. Trump. So time will tell on that front. I think that one of the key impact is if we were to keep it as is, i.e. the tariffs at 25% and 10% on energy. The impact based on what I have read, and there are multiple sources on this, there are different banks, but also the Canadian government, Bank of Canada, it could be basically a headwind of 2 to 5% to the Canadian economy. But again, some of these numbers are dated as well, so I think we have to be careful about what would be the real number. We have also to take into account that the currency has moved down quite a bit. So the Canadian dollar, as we speak, is at 146, 147 last night. So that also has some sort of mitigating factors. And there's also another reality that even for some of the manufacturers that we have, some of them are able to move some of their manufacturing or assembling into the U.S. soil. So therefore, they could find ways also to diminish the impact on their company as a whole. So there's just to remind you that the deficit that the Americans have vis-a-vis Canada is mostly due to energy, and that the U.S. enjoys a surplus in terms of services vis-a-vis Canada. But I believe services represent maybe 10 to maybe 20% of total trade between the two countries. So, a day like today, again, we really look into dislocations, movements in different stock prices, and sometimes there are really erratic moments where it creates opportunities, and that's what we've been busy doing this morning. Sometimes there are stocks going down for really no reason because they might have already full manufacturing in U.S. soil, and therefore they should not be impacted by any tariffs. So, as I said, I think the next sequence will be what is the response from the Canadian government, and we have to be careful about that because that might impact the other Canadian companies actually in terms of their own exports. And the next round will be very soon. So let's hope for the best, and we'll keep working really hard. And as a reminder, out of any sort of crises that we've seen in the past, including COVID, there are always opportunities where we can add value to our shareholders, and hopefully we're also going to be doing a good job at managing risk and downside risk for the unit holders. Thank you.